Okay, good morning, everyone, and welcome to the 203K webinar. We're glad you can make it this morning. We're going to take a quick moment and introduce ourselves because we're short on time but long on value, so we respect how busy all of you are and want this to be a great experience for you. So we're going to start off with Sandy.
Hello, everybody. Thanks for logging on to the webinar. My name is Sandy Butler, and I'm here as a representative for the agent point of view when you're dealing with clients or listings that may be best suited for the 203 FHA 203 renovation loan.
My name is Dustin Swigert, and I'm a renovation specialist for Prime Lending, and I only originate 203K and other renovation loans. I've been in the mortgage business roughly 10 years, most of that specializing in renovation. I'm very passionate about helping families obtain the dream of homeownership and helping revitalize communities. So this is why I do what I do. So I'm extremely excited to share this presentation with you today, and I'm confident that when we're done, you'll walk away with some golden nuggets that will impact your business in a positive way. So without further ado, I'm going to discuss the agenda and then jump right on into the presentation. So the topic at hand is 203K financing, which, by the way, is not the only type of renovation option, and I can get into more of that after this webinar. For anyone who wants to contact me, my information will be provided. There are two types of 203K loans. You have a streamline and you have a standard, which we call the full K. And we'll go over both of those briefly and then show some picture examples of what you can do and give you some illustrations along with the written content. So what I want you to do now is pull out a pen and piece of paper. So I want you to take some notes, plus there'll be an exercise for you at the end of this presentation that I'm sure you'll enjoy. So first thing I want you to write down on a sheet of paper is one bad thing you've heard about 203Ks. And don't worry if you can't or if you haven't heard anything, that's a good thing. You haven't been tainted yet. You can still participate in this exercise at the end, but real quick, just jot one down if you have. We're going to shatter that gossip here in a few moments. Okay, Sandy, did you want to add anything before we move on to the agenda?
Let's go through the agenda.
Awesome. We have about approximately 15-20 minutes, so any questions that you guys have, please write them down, and you can also put them into the chat, and we'll answer them afterward. The agenda, what are the benefits for you, the realtors? What are the benefits for your buyers? Some common misconceptions. We'll do a brief overview of the 203K program with some illustrations, and then we'll close with some final thoughts in the exercise, and then we'll open up for Q&A. All right, so what are the benefits for you? Well, the number one benefit by far is to sell more homes, period. This will help you expand your reach because distressed properties and aged inventory are all in play here. It helps make properties more marketable, the good, the bad, the ugly. Bring them all on. Have a listing appointment on a house that's outdated and need improvements. You can market this property with renovation financing eligible in your MLS comments. So when you're meeting with the seller, you can be the educated professional here, showing them how you can market this property in its as-is condition to your buyers out there, potential buyers, and they can make the home the way they want. You can increase your potential buyers. So there's no fear now in showing those fixer-uppers to your bargain hunters. The bargain hunters want the foreclosures because they're cheaper, they have some issues, they won't go regular financing, and that's not a problem. Now you have a solution that you can present. Close on a property in its as-is condition. Remember, renovations for the work to be done begin after closing, not before, so keep that in mind. Commission checks and checks paid out to the seller are all at closing, just like any other deal. And this is a big one here. Set yourself apart from the competition. Be the educated professional, because I guarantee you not all will embrace this, and that's okay. You'll be the one to benefit. It's not for everyone. Make it a habit to learn more and be educated on what can be done. It will get you more sales. And this is my favorite one here. Overcome property objections. You know the story, the love the house, hate the kitchen, the bathroom, the flooring, whatever the situation may be. Or I'd buy this house if it had this, or if it had that objection. Now you have the answer and can confidently suggest the right solution to your buyers. Help them visualize what can be done. So I want you to think for a moment the impact this has on your business. Not only that, but you play an important and vital role in helping revitalize your communities in which you serve. This really is a win-win for everyone. You know, this business isn't just about making money. It's about servicing the customers in the community in which you live and or work. I've been calling this the best kept secret in real estate for a long time, but it's really not a secret. The program's been around since the 80s, but what you have is an underutilization of this program and the benefits it has on our industry as a whole. But that's all changing one person at a time, which is why we're doing things like this webinar, is to educate everyone and spread the knowledge freely. So before I move into the benefits for the buyers, Sandy, do you have anything you want to add to this?
Well, I mean, kind of what you've already covered. I call it the best thing since sliced bread because
I like that.
Yeah, because every home is an option. And the people that I've worked with that have utilized the 203K, they all have ended up with significant equity after the renovation has been completed.
Yeah, great point, and we'll actually get into that here as we move into the benefits for the buyers. All right, these are just a few of many of the benefits. Fulfill 2 needs with 1 loan, purchase and renovate. 1 payment, 1 closing, and the maximum finance is based on the after improved value, not the as-is value. The buyers can make wanted and needed renovations such as energy-saving improvements or handicap accessibility modifications. This is the perfect option for distressed properties and aged inventory in need of updating. Renovation costs are spread through the mortgage term. This makes the down payment and monthly payments more affordable. Think of this as an example. The buyer wants to do $50,000 in renovations. They're only putting down an extra $1,750. I mean, the return on investment is incredible in that scenario. They can add their own personal touch to the property and make the home the way they want, modernizing the property. And besides, who doesn't like new stuff, right? New appliances, kitchen cabinets, all the while making it their own. One of the lines I like to use is turn the home you just like into one you really love. And this next one here, this is a biggie. Create equity with the improvements as Sandy has touched on. This is huge. And the overwhelming majority of the loans that close, buyers walk into the property with equity. This positions them for the move-up purchase later on, making it easier to sell, and now they have a down payment for that new house because of that equity they created. You are helping them right now see the benefits for that future gain. It's incredible. So now let's move on to some of the common misconceptions. These are the 3 things I hear a lot of when talking about the 203K loans. First one is they take way too long to close. From the realtor's perspective, there's too much work on my end, and they're way too complicated. On the next slide, I'm going to go over my answers to these common misconceptions. So I'm going to take the first one. They take way too long. I love it when I hear this because I'm always asking, who's handling it? Is it someone who specializes or someone who's done 2 or 3, or worse yet, it's their first one and you're the guinea pig? That's typically where you find the issues. They can take anywhere from 15 to 30 days extra, some shorter, some longer, and can even be as quick as normal time frames. It just depends on the complexity of the work that's being done and how quickly the buyer selects the contractor and turns in the bids or the work write-up so we can order the after-improved appraisal. The credit package is the same. It's the property that's different because you need the bids and the work write-up or the work write-up to order the after-approved appraisal. So on a normal deal, you're walking in the door, you get them approved, you're ordering an appraisal right away. With this one, you have the extra step because you need to know the scope of work. Now, if it takes a month to get the bids turned in, your loan's obviously not going to close fast. It's not going to close within 30 or 45 days. It's going to take a little longer. But here's the thing. Dealing with a specialist, this is part of that interview process, which is setting up the proper timelines and expectations to the buyer, and that helps speeds along that point of the process. For the realtors, too much work involved. This is business as usual. You have a slight modification to how you fill out the contract, so you select other financing, 203K. Closing costs are based on the purchase price. Don't worry about the cost of repairs. This is on the loan side only. It's just business as usual. Way too complicated. Are they more complicated? Sure they are. That's why you need a specialist handling the transaction. That's why you don't have that many lenders doing it, that many loan officers that are doing it. But this should not deter you. However, this should give you confidence when talking to the buyer, as you can set them up properly by educating them on dealing with a specialist so it's handled properly. So did you want to say anything, Sandy, on that?
Yeah, timing is everything. Like if you delay, if we all work as a partnership, that means
Exactly.
The buyer, the agent, and the lender, and of course the appraisal comes along because of the bid process. So timing is everything. The quicker you're able to get those bids done, and my suggestion would be to do it at the same time of the inspection if there's going to be an inspection. That way you're killing 2 birds with 1 stone, and you're able to turn those bids into the loan officer in a timely fashion. Make sure you have that conversation with the buyer. What is it that you really want to do, and what major improvements that need to be done? and not necessarily just the cosmetics, but if there's some major improvements like roofs or HVAC systems or some plumbing or electrical issues that you know that probably need to be done, or flaky paint issues, kind of figure that out before you start the process, so that you basically have a game plan, so that when you get your bidders in there or your contractors in there to give you a bid, you already know basically what they want to have done with the property, and that way you can know that you're staying within the scope of what their loan amount is going to be or what their approval amount is.
Yeah, that's a great point, Sandy. Having a team effort with the contractor and the loan officer and the realtor all educated, it makes for a smoother process. So let's jump into the programs now. We have two types of 2 or 3K loans. You have a streamline and you have the standard, or we call the full K. Now, before I go over these, please keep in mind that I'm not including any credit or property overlays that lenders may have. Overlays are just simply more restrictive guidelines than the published guidelines. All lenders have them, and they vary. This presentation is based on what's allowed in general with the program, but it's not all inclusive due to the time constraints that we have. So the first thing we're going to jump into is what type of properties are allowed. You have single family, multi-unit, condominiums, foreclosures and short sales, even mixed-use properties, but keep in mind, make a note, no funds can be used for commercial space. And then manufactured housing. First one we're going to talk about is a streamline. The streamlined renovation loan may be the right choice for your home buyers who want to make minor repairs or cosmetic improvements to the property they wish to purchase. No HUD-approved consultant involvement is needed because this program is designed to finance projects that can be completed quickly with little oversight. Now, the streamline doesn't necessarily mean easier. Most people think that the streamline is easier than the full K, and really there's no difference with respect to the ease of closing. It's just designed for less complicated repairs. Some of the loan characteristics are up to $35,000 total renovation costs, including your contingency and fees. Your fees would include any inspections, things like that. The contingency can range on a streamline anywhere from 0 to 20%. If utilities are not on, it's an automatic 15 to 20%. Again, some lenders have some overlays. Some won't allow a 0% contingency. Some require a minimum 10%. There's no structural repairs allowed. Only 2 draw disbursements per contractor, and monthly mortgage payments cannot be financed into the loan. So on the next slide, we're going to see some of the eligible repairs. This list is not all inclusive, so just think to yourself light to moderate repairs, non-structural in nature. Now, I'm not going to go into all of these, but you can see the list is pretty big. You will have what's called required repairs. Those are the repairs that must be included in the bid that meet minimum HUD standards. You know, your flaky paint, your subflooring showing, your roof's deteriorated, things like that. Then you also have optional repairs. Those are the wanted or desired repairs from the buyers to modernize or update the property. So as you can see from the list, things like roofs and gutters and downspouts, plumbing and electrical systems, siding, HVAC, and appliances are all eligible repairs under the streamline.
And the good thing about it too is, besides these eligible repairs in the streamline, buyers can actually include their appliances in that cost as well, so that they don't have to come out of their pocket to update the appliances.
Great point, Sandy. Now, this next slide is going to show ineligible repairs. Landscaping is not allowed. Luxury improvements such as pools, installation of a pool, spa, gazebos, etc. are not allowed. Structural repairs, any repairs requiring specs or plans, that would be like a home addition or a room addition, and then repairs over $35,000. Now, let's talk about the standard 203K or full K. The standard 203K renovation loan allows for major or more complicated work to be done. It requires more supervision throughout the project. The work typically takes up to 6 months to complete, and a HUD-approved consultant is required, and you can find them at the link there. You can search state, city, county, etc. to find an approved consultant. And the role of the consultant is pretty important. The independent consultant is paid by the buyer. They locate needed repairs. They inspect that property and identify these needed repairs with what's called a feasibility report. Now, I want to make a note here. I use a consultant on all transactions to perform a feasibility report, even if it's going streamline. And the reason why is the consultant that I use is a licensed master plumber, HUD consultant, licensed whole house inspector, and he has a contracting background. So not only is he going to identify these minimum required repairs, but he's also going to give the buyer a cost estimate. So we know early on in the process what it's going to cost and what required repairs are needed. helping streamline this process for us. The consultant will identify any desired repairs the homeowner may want to add above and beyond the required repairs. They prepare a work write-up, also called an SOR, or specification of repairs. This is what's needed to order the appraisal and takes the place of the contractor bid. So on your streamline, you have contractor bids. On the full 203K, you have the work write-up, or the specification of repairs. And then they also monitor ongoing renovation work after the loan closing. They are also a resource for their buyer. Now, some of the characteristics of the full 203K. Structural repairs are allowed, as we mentioned, including foundational. Home buyers have up to 6 months to complete the improvements. Inspections are required prior to fund disbursements. These are performed by the consultant. Up to 6 months of mortgage payments can be financed if the property is uninhabitable. One note here about the habitability, it is determined by the consultant. So if the house is only uninhabitable for 3 months, as indicated on the work write-up, they cannot finance 6 months of payments if the house is going to be habitable in 3. They can only finance up to the point of that uninhabitability. Next, we'll get into some of the eligible repairs. In addition to the streamline repairs, you have structural repairs. You can do home additions. You can do tear downs and rebuilds from the existing foundation. You can do garages, build or tear down, pool demolition, and then some of the ineligible repairs are same as the streamline noted, but I want to make a note here on landscaping. When demolishing a pool and filling it in, there are some landscaping that needs to be done afterward that would be acceptable. What's not acceptable is your Edward Scissorhand type beautification. I don't know if any of you have ever seen the movie, but he's got scissors for hands and he makes nice little animals and stuff out of trees and bushes outside. That wouldn't be acceptable. Now we're going to get into some of the before and after pictures so you can get a sense of what's possible and can actually see it. So here's the first photo. This is going to be an example of a full 203K. You can see the before picture, and now you can see the after picture. Substantial renovations were done. Obviously added a second story, did some modification to the garage, etc., the front porch. So I'm going to go back and show you the before and the after photo so that you can see what can be done.
This is the full.
This is the full.
203K.
Yes, this is the full 203K. And the next one we're going to do a illustration of the streamline. So this is a tore up kitchen that they are going to turn into a beautiful kitchen, as you can see here. So you got the before picture and you have the after picture. Now, so now you can see what's possible. Let's close on some final thoughts and the exercise I have for you to do. Sandy, before we move into that, did you want to add anything else?
No, I think we're good.
Okay. Some final thoughts here. Keep these 3 questions in mind. Are your buyers turning away from a home in the right neighborhood but with the wrong kitchen, maybe the wrong bathroom, the carpeting? They walk into the house and go, "Ugh, I hate this carpet, can't stand it." Are your buyers walking away from a house in their price range, but it doesn't have what they want? Are your buyers not interested in a fixer-upper because they don't know how they'll finance the improvements, or they are interested and you didn't realize this was an option before? You kind of try to talk them out of it. This is just another tool for your toolbox to help you out in the marketplace to better position yourself for more sales. So I've come up with this exercise to help you do just that. So once you get out that pen and piece of paper, I want you to write down one benefit or takeaway from this webinar that you've learned that sticks out and why. And then how would you explain it to your customer? So the next time you're out with a client and have an opportunity that comes up to explain this or present it, this will be much easier to convey because you've thought about it and you've connected with that benefit you've just written down. It makes it easier to explain to them. If you can come up with more, that's great. That's the goal. If you're excited, the customer is excited. See, we're out here trying to solve the customer's problems, and we're selling feelings. We're selling security. Keep that in mind when using this product. This is going to help you achieve those goals and help you identify the needs of your customers and do that. I want to share a little story with you as we end here. There was a realtor who was showing a property to a couple, and they had small children. And you know how it goes. Everything's going well. They're walking through the house. The kids are doing buy the house, mom, buy the house, dad dance. They're all dancing around. Everything's nice and warm and fuzzy. You think you're going to get a sale. And mom looks out the back window, and she starts to give silent kill switches to dad. And the realtor notices this and starts to inquire and ask questions. And you start to say, well, we really need to think about it, and we don't know. We'd like to look at some more properties. But they were so excited before, and now all of a sudden it's shifted. So the agent started asking questions, kept asking questions, and finally Mom said, at first I didn't think about it. I thought the pool would be a great idea, but we've got small children, and I'm just scared. I don't think that we want this pool. And so the agent had presented an option. Well, what if we could take care of that pool for you? Would this still be the house that you want to purchase? Would you be interested in finding out more, how we could tie that into this purchase? And Mom said, absolutely. Well, they gave her my name and phone number, talked to Mom and Dad, explained the situation. Not only did they demolish that swimming pool, but they upgraded the bathrooms and kitchen and bought some new appliances. So I want you to think for a moment how she utilized that and was able to think on her feet and present this option. She gained a sale by doing that. Because how long do you think it would have taken them to come back out and look at other properties after being discouraged? Probably took them a little while. But she explained the benefits, gave her my name and phone number, explained the benefits of the 203K, and she ended up getting a sale. And not only that, but they also made some other improvements. So keep that in mind. Think about how many opportunities that you could have to utilize this. So, Sandy, did you want to make some final thoughts here?
Yes, absolutely, because we focus more time on the benefits for a buyer. But don't forget this as an opportunity to market your properties. That might be those estate sales that are a little tired. That might be those short sales that obviously are being sold as is. And, of course, obviously those lender-owned property. Market the properties and give the vision to the next agent that might be eliminating it as a possibility to show it because they don't have the vision. So I do market properties that probably meet this requirement that would be best suited for this type of loan and market it to the agent so that because this would be a good product for the 203K loan. Also, you can use this loan, or the sellers or owners can use this loan to refinance their propities if they wanted to make any improvements prior to putting it on the market. I don't know how long they have to own it after they do that, but they can, if you have some existing homeowners that are looking to renovate their properties and they really don't have the out-of-pocket, they can refinance using the 203K. And then the last thing I wanted to mention was that obviously it's an FHA product, and these are all owner-occupied properties. So the owner does have to occupy it, or the buyer has to occupy it.
Awesome. Thanks, Sandy. Well, we thank you for your attention.
Now we've got a few questions. Yeah. So I'm going to put these questions out and let Dustin answer those. One question that we've got is, can the buyer be their own contractor?
The HUD guideline about being their own contractor is self-help is allowed. The mortgagee letter states that it's up to the lender to make that determination if they have the credibility and the time, the talent, and the assets to do that. FHA strongly discourage it. Some lenders will have an overlay where they say absolutely no self-help. So in a situation where that would make sense would be that the borrower is a general contractor by trade. In a case like that, that would make sense, but you have to check first to see if the lender will allow that.
Okay, thanks, Dustin. The next question is, what are the lenders looking at when they're looking at the contractors? What kind of requirements do the contractors have to meet?
There's no specific guideline within HUD that they publish on what to look for. They just want to make sure that the contractors are competent, that they are insured, that they're properly licensed based on any state or local requirements. And so each lender will have their own validation process for the contractor. They typically will have a profile report on the contractor, their name, their address, their company, some references, things like that. They may even ask for some financial statements. They'll ask for the general liability insurance and any workman's comp, and a filled out W-9 form, and then obviously their bid, and then they'll make that determination if the contractor has the proper credentials.
So next question is, who decides who the contractor is going to be?
It is really up to the borrower to decide who the contractor is. The lender cannot make any recommendations on who the contractor is. I mean, it is a great idea to get with a contractor who is familiarized with this process and the paperwork. Not all will want to participate, so if you can get a reference from the consultant or get a reference from your agent, that would be great. But the borrower is ultimately the one who determines who the contractor will be.
Okay, thanks, Dustin. The next question is regarding the loan amount and the approved amount. Can you touch on that?
Sure. Well, the way the loan works is you have your purchase price, and then the way the loan is determined is we take the purchase price and we add the cost of repairs to that. So you have your total acquisition. We then will compare that to 110% of the after improved value. We'll take the lesser of those two numbers and then the maximum financing of 96.5%, and that's how your maximum loan amount is determined. There is a worksheet called a maximum mortgage worksheet that your loan officer will fill out and to determine the maximum mortgage that can be financed.
So if the buyer has whatever they're approved at, that's their maximum loan amount.
Right. That's part of the process that I do with when I'm doing a pre-approval is I kind of get a sense of the property. I look at some pictures. I ask some questions. And then I'll add a little bit to the repair amount because when you do the pre-approval, excuse me, you don't know what the amount is going to be for the renovations. So what I like to do is I'll look at the property, I'll look at the interior photos, I'll ask some questions because you typically have seen the property once already. So then I will add usually about, I don't know, 5 to 10% to that number because it's easier to come down than go up. Then once we issue the pre-approval, that's where the feasibility report comes in. You get the property inspected by the consultant who will then do the feasibility report. So if that feasibility report comes back and the costs are way too high above and beyond what they're approved for, we're in our inspection period. Right then and there we can decide this is not the right property and move on.
Okay, great. One other last question that I have here, and this is a question I think I can answer, is how is the realtor paid? Are they paid on the sale price or the total renovation amount? And that answer is it's based on the sale price. The renovation amount is strictly the lender side of it, so you don't have any, the seller doesn't have anything to do with the renovation cost, and your commission is based on strictly on the original sales price of the property.
That is correct, yes. Everything is contract price. As I mentioned before, extra work on your end, it's really just a slight modification to what type of financing. Everything else is business as usual, contract sales price. The closing costs are based on, the seller pay closing costs are based on the purchase price. The seller is going to get their net proceeds based on purchase price. The loan proceeds for what we're doing on renovation is strictly for the loan and the loan only.
Great. Very good questions, and I don't know that I have anything additional to add because we're kind of running out of time here, so we just want to appreciate your time and energy to learn more about this product and make it a part of your toolbox of things to use when you're working with your buyers as well as your sellers.
What I will do is say if you have any more questions regarding this presentation, feel free to give me a call or email me. My phone number is 513-907-5766. Or you can email me at dswigart, S-W-I-G-A-R-T, @primelending.com, and I'll be more than happy to answer any questions that you may have. And I think that's our time.
That's our time.
All right. Thank you, everyone. Thanks for coming. I know everyone's busy. We appreciate, respect your time. Hope it was a great experience for you. And again, if you have any questions, just reach out. Thank you very much.
Thank you.